As an investor, you should know whether the company is making money or not. You should know whether it is consistently making money or not. You should know whether it is growing or not. That is the usage for us as an investor to read the income statement of a company. Hello my dear friends, welcome back. And in today's episode, let's try to understand what is an income statement. And if you can remember, in my last episode, we covered what is a balance sheet. And let me ask you a question. What are the three most important components of a balance sheet? Do you still remember? Assets, liabilities, and shareholders' equity are the three most important components of a balance sheet. And similarly, what are the three most important components of an income statement? It is basically sales, expenses, and profits. So these are the three most important components of an income statement, and obviously income statement is a financial statement that provide the details of sales, expenses, and profits. Like I said, making use of accounts. So let's try to understand the usage of income statement in this episode. Now, why we have to read the income statement? Now, balance sheet, why we read balance sheet? To understand the financial health of the company and liquidity position of a company, so that we can understand whether the company is going through some bankruptcy risk, or maybe it will face any liquidity issues and default risk and all. So that is the purpose of reading a balance sheet. Similarly, the purpose why we read an income statement: to know whether the company is making money or not. It is very simple to know whether the company is making money or not. And by the way, you should know what does it mean by sales. So obviously every company will sell a product or service to generate revenues. So basically revenues or sales is also known as the top line. Now that is the sales. Now what is expenses? Obviously the bills, the expenses, the cost incurred by a company to generate these sales. Some of the examples are employee expenses, advertisement, marketing, administration expenses. There are so many expenses, tax expense. There are so many expenses a business has to incur. Now sales minus expense. Sales minus expense is equal to profits. So this is the residual amount that belongs to the shareholders of the company. So net profits is the residual amount that belongs to the shareholders of the company. So why we read the income statement, or why we try to analyze the income statement of a company? First, we want to know whether the company is making money or not. Second, making money is only one thing. Consistency is very important. So the second thing that we want to know is whether the company is consistently making money or not. Consistency is very important. Third is whether the company is growing or not. It should be a high growth company. So generally I like to invest in high growth companies, and I recommend you the same thing. So first, you should know, as an investor, you should know whether the company is making money or not. You should know whether it is consistently making money or not. You should know whether it is growing or not. So to know all these answers, to get all these answers, we read the income statement of a company. That is the purpose. That is the usage for us as an investor to read the income statement of a company. So that's it for today, guys. In my next episode, let's try to understand what is a cash flow statement. So in case if you are new here, then please consider to subscribe my YouTube channel, and don't forget to hit the bell icon so that you get instant notifications as and when I upload a new video. This is Vishnu Dikonda signing off.